Welcome to Market Talk. I'm Amber Lancaster here with Paul Mampilly. Today's update is for the week of May 11th, 2020. I'll begin with the latest economic overview, my innovation story of the week, and of course, the developments in America 2.0. So let's begin. So first off, most economists are expecting the next monthly round of U.S. unemployment rate releases to top at least 20%. It's a direct reflection of the overall economy shutdown to help flatten the virus curve and save lives. And they project this rate will eventually peak and then get better. But last week we saw not one, not two, but 5 glimmers of hope in the overall economic data. So first, is the timelier weekly initial jobless claims data. For the 5th week in a row, the U.S. saw a reduction in filings for unemployment benefits, and all weekly jobless claims rose by 3.17 million, down from 3.8 million the week prior. So Bloomberg reports, quote, as some states move toward reopening, further declines can be expected in the weeks ahead. And a turn lower in continuing claims could provide a clearer signal that the economy has reached a bottom, and as it would indicate rehiring of the temporarily unemployed, end quote. So second, looking at the April jobs report release a little deeper this past Friday, it showed that 20 million jobs were lost per the Labor Department data. And it shows of the 20 million jobs lost, 2 million jobs were unfortunately permanent, but while 18 million jobs were classified as temporary layoffs. So this means, per Bloomberg quote, about 18 million Americans on temporary layoff have the potential of returning to the workforce more quickly, provided that their former employers bring them back as the economy reopens, end quote. And third, another bright spot was seen in the weekly MBA mortgage applications. So last Wednesday, in that number release, data is showing that a market rebound is happening in home buying. So mortgage applications to buy a home increased for the 3rd consecutive week, and it's up 7% from the week prior. The 4th glimmer of hope comes from the IPO market. So per Bloomberg quote, U.S. initial public offerings had their biggest week since the pandemic began in mid-March, ending a drought in the market that's sensitive to volatility. So including special purpose acquisition companies, also known as SPACs, which are blank check firms, U.S. IPOs have raised more than $18 billion this year, the data show, end quote. So lastly, the 5th hopeful stat, as this chart shows, is the S&P technology sector, a sector we pay very close attention to at Bull Profits. So the S&P tech sector is expected to see earnings, quote, recoup all of the lost earnings by the end of this year, per a recent Baycrest Partners analysis. So where U.S. economic releases are concerned, there are 8 major releases this week. On Tuesday, March's Consumer Price Index, or CPI, month over month will post at 8:30 a.m. On Wednesday, MBA weekly mortgage apps and April's Producer Price Index, or PPI, final demand month over month will post at 7 a.m. and 8:30 a.m. respectively. On Thursday, initial jobless claims for the week ended May 9th will post at 8:30 a.m. And on Friday, a set of quadruple releases, April retail sales month over month and May Empire Manufacturing will post at 8:30 a.m. And the April industrial production month over month and May preliminary University of Michigan sentiment will post at 9:15 a.m. and 10 a.m. respectively. So now for my innovation story of the week. Tesla's solar panel roofs recently made the headlines. Elon Musk stated that the company plans to reach 1,000 home installations per week, actually, within the next year. And moreover, the CEO of SunPower, another solar company, announced that solar demand is starting to rebound after the virus shock. And finally, in our America 2.0 update, back to the home buying front, digital brokerages Redfin and Zillow are jumping back into the new high-tech world of house flipping through their iBuying program. So iBuying means that they make fast offers to home sellers, and upon the home seller's acceptance of the offer, Zillow, in this case, would buy the home, make very light repairs, and then resell it. So during the pandemic, both brokerages are seeing an increase in web traffic of house hunters scouring the databases for homes to buy because no matter what, we are still in the midst of an historic housing shortage. So that's it for me this week. Paul, please share what's on your mind.
Thanks, Amber. Overall, the stock market, Amber, I know all the data, you said glimmers of hope, but truly the stock market is the best prognosticator, best predictor that I have ever seen. And yes, it gets things wrong. However, because people are betting with real money versus strategists and economists and people like that, they're largely just working off models. However, when you're betting with your own money, that matters a lot more than when you put together a model. And the stock market, as we have been telling you for weeks and weeks, is anticipating, predicting, prognosticating, and telling you that this is going to be America's greatest recovery, as we have been repeating here week after week after week, that it is going to be a V recovery, and not just any V recovery. However, it is going to be a rocket ship V recovery, based on so many of the things that you have just reported on, Amber, which is that house buying also has now moved into a different era. Clearly, the vast majority of people who are looking to buy a house no longer need to go to the house to decide if they want to buy it. They are using all kinds of electronic mechanisms, everything from virtual reality to electronic closings, to virtual seeings. This is a business that has gone virtual, and there is still an extraordinary level of demand that is out there. And that underpins everything that is going on in our economy, which is why I believe that the stock market is showing you, telling you that this is going to be a V rocket recovery, a V rocket recovery. In other words, we are going to come out of this, and economic growth is going to be greater. That's right, greater than when before we went into this, because there is so much pent-up spending that is now building up. And once people start to move into their homes, you are going to see an unbelievable, incredible amount of spending pushed through our economy, which is going to drive production figures higher, capacity utilization higher, consumption higher, and it is going to completely shock so many people that are focused on the past, looking backwards instead of looking forwards. Now, the number one way to really participate in this V rocket recovery, that's right, a V rocket recovery, is to buy the stocks of the companies today that are going up the fastest. Now, these are the small stocks. These are tiny little stocks that represent the heart and soul of America 2.0, because these small little companies, this is where the innovation happens. This is where the risk-taking happens. This is where, actually, for the last 10 or 15 years, these companies have struggled to get the support of everyone from the stock market to the banks. However, in this recovery, they are perfectly situated. They are perfectly, absolutely pitch perfectly situated to get the benefit of what the Federal Reserve is doing, to get the benefit of what the government is doing, and to get the benefit of what people are doing. In other words, people are buying houses. They also are going to put money into the stock market because they represent the millennial generation, Gen Z, who largely are going to come out of this with rising incomes, going to be buying homes, spending money, and they will also be buying a lot of these stocks because these stocks represent their experience, the technology of today, the products and services today. You want to get in, and I believe this is the best time to get in. Click on the strong hands above, and this will take you to a presentation on my incredible Extreme Fortune service that laser focuses on these incredible, small, innovative stocks that today are positioned perfectly for America's greatest recovery. So just want to say, if you like the content in this channel, make sure to subscribe to us, give us a thumbs up, comment below. Subscribe to me on Twitter at Mampilly Guru. Amber, you go next.
Yes, I'm at A Lancaster Guru.
and want to reiterate that I am still bullish, optimistic, positive, BOP, as I like to put it on Twitter, because everything is setting up for our stocks, America 2.0 stocks, to go up and to continue going up, because they represent the way that this economy is going to rocket recovery out from what is currently going on. And with that, back to you, Amber.
Wonderful words of encouragement as always, Paul, and thank you to our viewers for tuning in this week. We wish you a productive, healthy week ahead. Until next time, take care.